people at home working and working hard. And there he is. Hey, Kevin, I can see you great.
Yeah, you know, it's fun. I'm working from home because I got stuck in traffic. It was an hour and 15 minutes to get to downtown. So I said, oh, I'm not going to make it. So
Yeah.
I came home and tried to work from home.
And Kevin, maybe we could do it someday from your car when you're like the mobile office traveling in the car.
You know what? It would have been today if I didn't turn around.
Sitting on the 405 or the 5 or the 110 doing the webinar. That would have been interesting. That would have been one for the record books. And Kevin, we
insurance coverage to kind of really deal with the 21st century issues that we all starting to experience. I'm going to give you an update on the need for cyber crime protection and the new coverages available to protect your insurance.
Great. Yes, and you talk about 21st century crime issues, Kevin. You know, technology is changing so fast. Businesses have to change to stay up with all the new technology, et cetera. So there's really a lot going on.
Yeah, and that's when we talk about what's new. It's technology. Technology is the word. You see, with technology, we have large amount of data and money that moves very, very quickly. And when you couple that with people who are untrained, uninformed, unmotivated staff, we're starting to see a huge demand in areas of computer fraud, funds transfer, employee theft coverage, and social engineering.
So there's a lot of new material to go over today regarding coverages and crimes that are happening to community associations and other types of businesses as well. And can you give us an example, Kevin, of what you're talking about?
Sure. Yeah, when we talk about technology today, here's a perfect example. We have a former community association property manager who pleaded guilty to 14 counts of wire fraud and 5 counts of identity theft. Okay? What he did was he stole the identities of at least 5 different management company executives. He then created fraudulent emails and other documents in the names of those management company executives. His goal was to do one thing: have the condominium associations wire transfer him money.
Okay, so he created fraudulent emails for these 5 different management company executives. How did he do this, Kevin? How did he pull it off?
This is how he does it. He uses social engineering tricks to steal the identities of the new management company. Okay? And he does that by goes to the new management company's website. Or he may even go to the Facebook page or LinkedIn or their Twitter. And then he creates fake email address using their names.
Oh, okay, fake email addresses. Okay, so social engineering tricks, Kevin, is how he did it.
Yeah. And then what he does, create his own businesses with a similar name as the current management company and opens up a bank account in the name of that business.
Okay. So he creates a fake company with a real bank account for the fake company. Okay.
That's right. So instead of his current management company, XYZ Management Company, his company is XXZ Management Company.
Okay, so the names are very similar to confuse people and make it think it's legitimate.
Exactly, that's what he does. So he creates all these false documents, including purchase orders, invoices, insurance records, email, all to create this illusion that he is an actual real management company.
Okay, to create a fake company and make it look real. And because he was a property manager, Kevin, he knows how to do this stuff.
Exactly. He knows the board of directors, all these associations, so he's easy to really get in there and try to manipulate them. And so what he ends up doing is he ends up persuading the treasurer. He tricks the treasurer of the condominium to provide him with funds to repair the roof, but he says those roofs need to be repaired.
Oh, okay. So he's tricking the treasurer. He knows who the treasurer is. He knows how to go about how to create the invoices, etc. Okay, so what happens next, Kevin?
So once the treasurer gave us okay, he says he approves it, then the ex-manager provides payment instructions to the treasurer, who then told the bank to transfer the funds to the ex-manager.
Wow. Okay, so he was able to pull this off. He was able to pull this off. And the money's gone. So he stole the money from the reserve account by knowing the inside way to get people to transfer money and how to create a fake company to trick them.
Yes. Now, he eventually gets caught, okay? And he was sentenced to 5 years in jail. Now, this is interesting how he got caught. he got sloppy. He started using poorly fake company names, and then the mailing addresses didn't match up to the company names. One of the addresses that he used was an entrance ramp to the freeway.
Oh, okay. So that's a little sloppy. Yeah. It wasn't the perfect crime then.
Exactly. But you can see the detail that he went into and how easy it was just by going back there and going to the Facebook page or LinkedIn or a website and finding out who the executives are, creates his whole company, and then he goes to those same community associations that he managed, and then he tried to get them to wire transfer funds and said, there's roofs need to be repaired.
Wow. Yeah, and the sad part is he was able to steal the money and cause all this chaos at the association. And, you know, everybody joining us today works in the insurance industry, most of the people on the webinar today. The big question, Kevin, is there coverage for this situation?
And that's what we're talking about today, crime coverages, because that's what's happening out there today. And because of the way community associations are developed, or because of their goal, okay, they need to rely upon a comprehensive crime insurance policy to fully protect them today.
Absolutely. And I did want to stop and mention for a second, if anybody would like a copy of today's presentation, or if you have any questions about what we're talking about, please send me an email to sbranson@kdins.com. And we also have a chat box on the screen that you can type in your questions. And if we have time at the end, we'll answer your questions during the webinar, or we'll get in touch with you after the webinar. And then I also put recordings of all the webinars on our website, on the webinar link.
Yeah, see, Sherry, you know, when we talk about community associations, we're talking about an association or a corporation with very little oversight of people handling funds and information. Most community associations, they turn out handling all the funds, even a reserve account, which should never happen, to this independent community association manager. Again, with very little oversight.
And that would make this cybercrime very easy, right, Kevin?
And that's the whole point. See, let's look again at the whole treasurer thing. The treasurer of the condominium was tricked into sending funds to that criminal pretending to be the manager. And as a result, a significant portion of that reserve account that probably set aside for roofs is now gone.
Very sad situation. So associations have to protect themselves.
And this is the whole thing about cybercrime for community associations today. When we talk about cybercrime, we talk about criminals out there who are trying to gain unauthorized access to the association's funds. I'm talking about the assessments, the reserve accounts, vendor payments. That's what they're looking for.
Yeah, I mean, associations are like our businesses. They're holding on to large sums of money.
Yeah. Now, this is the most common way cyber criminals gain access to funds. This is it. What they do, they send an email with a link requesting a payment to a vendor or maybe a cable, electric, or a gas bill. But it's a fraudulent email, and the link itself contains a virus.
Okay. I get those emails all the time.
Exactly. We all do. So we all say we have a late payment or a bank, or we need to change our password. But what happens, though, when you click on that link, now all of a sudden there's a virus attached, and that criminal person has access to all the information on your computer.
Absolutely. And I know, Kevin, we were talking in another webinar about the fact that, you know, with new IT protection for the computers themselves, like firewalls, et cetera, now they're trying to go through people to get access to the systems, right, with these emails.
And that's what social engineering is. Social engineering is tricking you into giving the information as opposed to trying to get through your firewall or trying to get through your security update. It is social engineering, which is a major problem today facing all of us.
Absolutely. Okay. And now, Kevin, we're talking about crime insurance, you know, and social. We just talked about a really good example of social engineering, creating a fake company and tricking the treasurer into transferring money. But the treasurer did willingly transfer that money because it was a con, basically. And now, for the people joining us today, are there different types of crime policies for people to be aware of?
Okay, sure. Especially today with these high-tech schemes out there, your insured has to have the right type of crime policy to fully protect them. Right now, we divide crime coverage into two categories. One is part of the package policy, where coverage is added by an endorsement to the property and liability. It's usually at a lower cost. and coverage is very restricted and usually only provides employee theft coverage.
Okay.
It's very limited definition of employee to include only compensated employees and does not extend coverage to the property manager.
Okay, so volunteer board members would not be covered.
Exactly. You know, that's why, Sherry, the best protection out there is a standalone crime policy that is designed specifically for community association, because the employee theft coverage extends to non-compensated officers, community association managers, and all employees.
Okay.
Also, is extended to social engineering claims, computer theft, wire transfer fraud, deposit forgery, more than just the employee theft coverage that most package policies give.
Mm-hmm. So basically, you get what you pay for, Kevin.
Exactly. That's what it is. Exactly how that works.
Okay. So package policy is not going to include a lot, where a standalone crime is going to cover much more extensive claims and crimes. Now, you just mentioned employee theft, Kevin. Can you define for everybody what exactly is employee theft coverage?
Okay. Now, going back to our original example about this ex-manager who's masquerading as the current manager, the question off the bat is there coverage under the employee theft section under the crime policy? Okay. Now, employee theft coverage is the direct loss of money, securities, and property caused by theft or forgery by an employee. So the key terms here are two things. What is a theft and who is an employee?
Okay, so we have to understand what these mean, right, Kevin?
Yeah, so when we talk about theft, a theft is the intentional and lawful taking of money, security, or property to the deprivation of the insured.
Okay.
Okay, so it was intentional and lawful taking of money. Okay, so that ex-employee intentionally and lawfully took the money.
Okay.
So now the question is he an employee? An employee is anyone who's compensated by salary, wages, and commission.
Okay.
Under the crime policy, okay, for community association, the definition of employee must include volunteer board members and the management company because they handle the money.
Well, that would make sense. If they're not covered, they're, like you said, they're handling the money. So what would that policy really cover? It wouldn't cover much.
Exactly.
Mm-hmm.
So now we have a taking of funds by an ex-manager who at one point was an employee based on the definition, correct?
That's true. An ex-employee, former employee. Mm-hmm.
So the question is, are ex-employees covered?
Mm-hmm. Are
and
they?
The answer is, even though I'm not a lawyer, I say it depends.
Okay. Okay. So in some situations they are, Kevin.
This is why. Most policies provide coverage for ex-employees. And again, the manager would be an ex-employee under the policy for a certain amount of time. Could be suspended for 60 days. So if the crime was committed in that first 60-day period, then coverage could be provided.
Oh, okay. Okay, so that makes sense. Alrighty.
All right. Now, for the purpose of our example, though, we're going to say he stole the money itself 6 months after he was terminated, usually either like inside knowledge or passwords that we never can.
Oh, okay. Yeah, that could happen because he's taking the passwords with him. He has knowledge of the system. It might take him 6 months to create his fake company. Mm-hmm.
Exactly. So he's no longer now, 6 months later, he's no longer insured in the policy, so which means that the ex-manager under this insurance agreement, there's no coverage.
Okay, so he wouldn't be covered if it's beyond that 6 month point. Okay, that makes sense.
Okay. All right. So that's employee theft. Number two is funds transferred fraud coverage. Okay?
Okay.
Funds transfer fraud coverage applies if a bank transfers funds based upon fraudulent documentation directing the bank to transfer, pay, or deliver funds from the association's account without their knowledge or consent.
Okay, so the difference between this, I just wanted to point out to everybody in that first scenario that we talked about with the ex-manager, he basically tricked the treasurer into sending the money, but the treasurer did it knowingly, where this is without knowledge. Right, Kevin?
Exactly. So let's go back to the ex-manager, okay? All right. There was a fraudulent documentation directing the bank to send the funds from the association account, right?
Mm-hmm.
So that was done. We talked about fraudulent documentation. It was done. So there was a fraudulent documentation. So fit the definition right now. you're correct, Sherry, in that it becomes a problem because the treasurer actually authorized the transaction. He was tricked into sending the funds to this person. The fraud was committed with his knowledge and consent.
Mm-hmm. Mm-hmm. Absolutely.
Now, let's talk about how there would be coverage under this situation.
Okay.
Okay? In order for there to be coverage, right, the treasurer would not have to be involved. Okay? Coverage could have applied if the ex-manager, let's say, gained access to the treasurer's password through the email we talked about earlier. We talked about an email scam. If the treasurer clicked on the email containing that virus and then directed the funds be transferred, then that would be covered under the funds transfer coverage.
Okay. Okay, then there would be coverage
Right.
under this funds transfer. Okay, gotcha. Okay.
Yeah. All right. So before, the treasurer was tricked into sending the money this way. The treasurer might have been tricked into the virus, but he didn't have knowledge or consent that the money was being transferred out.
Gotcha. Okay, somebody did it with behind his back. He had no idea the transfer was taking place. Okay. So that's the difference between
Exactly.
funds transfer and the social engineering where you're willingly transferring the money. Okay. And
Okay.
what about
Next-
computer fraud coverage, Kevin? Can you explain that a little bit?
Yeah. We talk about computer fraud coverage. It's the use of any computer to fraudulently cause the transfer of funds from inside the premises to a person or place outside those premises, again, without the insurer's knowledge or consent.
Okay, so this is
Let's go
outside,
back
Kevin.
let's go back to our original ex-employee, right?
Mm-hmm.
So the ex-manager caused a fraudulent transfer to occur, and it was inside the premises as soon as the treasurer sent the money from the computer.
Mm-hmm. Mm-hmm.
Right?
Absolutely.
All right, so based on that, again, the problem goes back to the same thing it was before. The fraud was committed with consent and knowledge of the treasurer.
Right, absolutely. Okay. So this, if the ex-manager came on the premises and gained access to the treasurer's computer, then, and he did the transfer, then coverage could comply.
Let me give you an example. Okay, if the ex-manager came onto that premises itself, gained access to the treasurer's computer because the treasurer keeps his password right there on his computer, then he went inside the system and directed money to his account, that is computer fraud coverage.
Okay, that's computer fraud. Okay. Comes in, gets the password, does the transfer. Okay.
Yep, inside the premises.
Okay, gotcha. Okay. And now with our ex-manager example from the beginning, now I know we're going over some complicated stuff, so if anybody has any questions, please send me an email to sbranson@kdins.com, or you could type your questions in the chat box on the screen, and we'll give you a call after the webinar, or we'll answer your question at the end. So please email or type in the chat box. And now, Kevin, the first example of the ex-property manager tricking the treasurer into sending the money was social engineering. Now, what about social engineering fraud coverage? Can you explain what that does?
Sure. That is brand new coverage. That is probably the most important coverage you can get today on your client policy. It's a very inexpensive coverage. You're talking about $60 or $70. There's not a lot of money there, but it provides coverage for social engineering fraud. Social engineering coverage pays the insured for loss from transferring, paying, or delivering funds caused by social engineering fraud committed by a person pretending to be an employee, vendor, or client.
Okay. And can you define the social engineering fraud?
Okay. Social engineering fraud is the intentional misleading of an employee through the use of instructions received by an employee.
Okay.
So we look at, we're talking about there, the original treasurer is an employee. He was intentionally misled into believing it by a person pretending to be an employee, vendor, or client.
Okay, that makes sense. So he was tricked into giving the money away, right, Kevin?
Exactly, and that's what it boils down to. When you trick somebody and giving that money away, and again, the key thing here, the employee must be convinced that the request to send money is legitimate and therefore act upon that request. He has to know, feel that's legitimate.
Absolutely. Okay. And we talked about, he was emailed and tricked into sending the money. So the social engineering claims can occur through email, and they can occur other ways, right, Kevin?
Exactly. The key thing in here is talking about emails. So the emails that proof. The emails are proof. We have that proof of loss. It's right there. So the email is the most important aspect of it.
Mm-hmm.
So now, and that's why it is really important to understand that the person is pretending. Here we go. We have a person pretending to be someone in management, tech support, and a friend. It is the imposter there. Okay. His job is to do one thing: send that paper. You know, again, we get those all the time. We get, people pretending, or corporations pretending to be someone saying, we have a late payment there, or we got to pay it, or else. And all they want to do is get access to the money. And they do it by one thing: wire transfer. Because once that wire transfer is done, it's usually too late to recover the funds.
Mm-hmm. And Kevin, could it be done by a phone call? Like if somebody called somebody and asked them to do it, could it be done that way as well?
Yeah, definitely. It definitely can be done that way. But let me tell you what's the most effective right now. This is what we're seeing more and more. This is the number one social engineering scam that we're seeing right now, is when someone in management, usually in finance or accounting, receives a fraudulent email from someone pretending to be the CEO or president of the company, informing them that the company is involved in some major transaction and needs money immediately. The money is sent to the imposter, and the company is out of thousands of dollars.
Wow, that's pretty scary. And now, can you explain to everybody, we went over a lot of different types of fraud. Can you explain in very simple language how social engineering fraud is different than computer fraud and funds transfer fraud?
And that's important because people are getting those things mixed up. They believe that just because of a fraudulent act occurred, but when the employee willingly surrenders funds, there's no coverage. He's not aware that he's been tricked, but he is an active participant in the theft. He's unaware, but he's a participant in it. That's what social engineering fraud is all about. In computer fraud, a fraudulent act is committed by a non-employee inside the premises without the knowledge or consent. In funds transfer fraud, employee funds are transferred by non-employee, not on the premises, but again, without their knowledge or consent. Okay. That is the key.
Okay. And the scary thing is there's so many different types of fraud. There's lots of different types of fraud, and criminals are getting more and more creative in how they're committing these crimes. And now, Kevin, regarding other crime coverage, I know we're talking about crime, all crime today, all crime insurance. What other coverages are available for people to be aware of?
Well, I guess what my battery light just came on. I got a few minutes left before I close down. Okay. All right. I got to go this fast before I shut down. Okay. We talked about forgery or alteration coverage. Okay. That applies to forgery or alteration of a financial instrument issued by the insured with the intent to deceive.
Okay. Okay.
This is by non-employee who forges or alter checks.
Okay, so forgery, alter checks. People know what that is. Okay.
Okay. Now, money orders and counterfeit currency, loss caused by an insured's good faith accepting of worthless money or counterfeit currency. Okay.
Okay.
Just like forgery, alteration, money order and counterfeit currency are made easier today by today's technology. Ability to scan and deposit checks remotely. The big issue. I just lost my systems.
Oh, okay. You lost your. Okay. Well, we've lost Kevin, but thank you, everybody.
No, but I'm still here.
Oh, you're still there. Okay.
Talking.
Oh, okay. Okay. Okay.
Let's shut down. Oh boy, these things are. Okay, what was the next one on there on the list?
Okay, we're premises and in-transit coverage, Kevin.
Okay, premises and transit coverage. That is, premises coverage is when the coverage is inside. Oh boy, it's crazy right now. Okay. Interesting that you rely on your computer. Premises coverage is important because you have the loss itself has to occur. And the key word interesting about that is you have destruction and disappearance coverage in there. And that's an outside person, non-employee coming inside the premises and stealing money or securities. It's the only area where you have destruction and disappearance coverage. You don't have an employee theft. Employee theft is theft and forgery only. In the premise and transit coverages, you're talking about destruction and disappearance of coverage. So,
okay.
That's important coverage you should have there, because it's the only time you get away with destruction and disappearance of money.
Okay. Okay, that makes sense. And now, Kevin, regarding concerns, what should people be concerned about regarding crime coverage? What are the most important highlights, would you say, regarding crime coverage?
Well, I can't go through that because I have no idea. I can't. I have no computer.
Okay, no problem. I'll just say the number one reason that we had talked about was the inadequate proof of loss. So when there's a loss, the need to fully complete the proof of loss statement and return it is really important. And
sure. Okay, let me talk about the proof of loss.
Okay.
It is very important that you have a proof of loss. The problem today is that when there's a loss, especially in the community association, you don't have proper documentation, you don't have the records to prove the amount of the loss. That is very important to make sure you have that information. You got to have it. Without it, you're in trouble. A lot of times, if the person who ends up embezzling the funds end up creating the problem. They take all the records with them, and if the money is missing, you have no idea how much money it is.
So record keeping is extremely important. Record keeping is very, very important. Okay. And then would you like to?
Next one?
Then the next one is claim expense coverage. There is claim expense coverage. So let's talk about that a little bit, Kevin. When you purchase claim expense coverage.
Yeah, we have claim expense coverage. It helps you to determine the amount of the loss. So there's an insurance agreement for claims expense coverage. You got to make sure you have it under the crime policy.
Okay. And what about, Kevin, this one I come across, I get this question quite a bit, and I know you do and a lot of underwriters do, is inadequate limits carried by the insured. Can you talk about that a little bit?
Yeah, the biggest problem you have, one of the problems you have is that when you have a claim, a lot of times we end up having a $50,000 limit or $25,000 limit. But you end up with situations where these claims, we have bookkeepers or treasurers, when they embezzle funds, they can embezzle over a period of time, over several years, and you don't have an adequate limit. Now, if you want to know the limit under crime policy, what you have to do is look up the lending institutions require, which is 3 months assessments plus the reserves. That's how that works. 3 months assessment plus the reserves.
3 months assessments plus the reserves is generally what the banks require. Okay, that makes sense. Yeah, and like you said, embezzlement can go on for many years, so the losses could get very high. Okay. And Kevin, do you want to talk about third-party coverage? Talk about that a little bit?
Sure. Yeah, third-party coverage is very important because what third-party coverage does, it gives you more coverage if you happen to work in a situation, especially if you work in a co-op or a building that has doormen and they enter into people's units and they end up inside the units, you have things missing. So third-party coverage allows that kind of coverage to occur.
Absolutely. Okay, and here's a really important one, Kevin, a prior knowledge of dishonesty.
Yes. One of the biggest problems you have, especially non-for-profits, is that once somebody committed a dishonest act in the past, people in nonprofits are very forgiving and said, we will hire you, we believe you'll make restitution, and we believe in you. Well, once they commit dishonest act, you have knowledge of dishonest act, they are no longer covered under a crime policy. Now, some crime policies allow you to have a sublimit, meaning that if you sold less than $10,000, it's okay. But if you sold a large amount of money, once that's done, it's over.
So it's very important to know what's in your policy if an association is hiring somebody with a criminal past. Absolutely. Okay, and now the adequate coverage, if somebody's not purchasing adequate coverage, could you talk about that a little bit?
Sure. Adequate coverage is important because right now, making sure the management company is added and the employees and non-compensated officers is one thing. One thing you have to be concerned about now in crime is we're moving over to discovery policies and not loss sustained policies. Historically, there were loss sustained policies under the crime. It's no longer necessary. You got to have a discovery policy because that gives you the kind of coverage you need when you have a claim that's happened over a long period of time. That's probably the number one thing you have to be careful of.
Okay, and if you have any questions about all these details that we're going over regarding discovery policies, third-party coverage, prior knowledge of dishonesty, I can send you a specimen policy of our crime policy and a social engineering, the endorsement as well, so you can take a look at, the details on that. If you guys have any questions, please send an email or type in the chat box. And now, Kevin, let's do a quick recap of what we went over today. I know we're talking about 21st century problems and technology and how insurance and businesses have to stay up with this. So can you just kind of recap what we went over?
Sure. Yeah, the key right now to remember is a couple things. With technology today, you have to have the kind of coverages that you need. We're seeing more and more claims by non-employees, where historically we've seen employee-related claims in crime. Now we see non-employee-related claims. That means that you have to have computer theft coverage, wire transfer fraud coverage, social engineering coverage, all the different coverage to fully protect the association. Now, today we went through a lot of different things. Understand that it may appear complicated, but they're pretty simple. If you have knowledge or consent of giving money away, social engineering, not covered. It is probably one of the fastest growing areas of claims out there. Funds transfer coverage, computer theft coverage, very hard to do because you have to either get on the premises or have somebody download a virus. So if you can avoid that, the bigger issue right now, social engineering, because they want to trick us into giving information so they can take over the funds.
Absolutely. Great. Thank you, Kevin. And the whole point of, what we talked about today is, since associations basically are businesses, they're handling lots of money, they have their reserve accounts, so they really have to protect their reserve accounts and protect the association with a crime policy in the best way that they can. Great. Thank you, Kevin. Thank you for all this great information. And thank you, everybody, for joining us. And I'm sorry I can't see you, but at least I can hear you. And thanks, everybody. And please join us in April, on April 26th, as we discuss we do a cyber risk Q&A for community associations. Thanks, and have a great afternoon. Take care.
Thanks a lot.
Thank you.